Good morning, everybody. The markets are much higher than they were from yesterday. With our caution when we left the markets yesterday, we do not want to be short this contract. As long as there's heavy selling in the world's equity markets, and the E-mini especially. China's stopped trading when their markets were down 7%. They devalued the yuan. The euro is up. The dollar is up. Treasuries are up. Gold is flirting with 1100. These markets are closed, but the effects of their action took equity markets around the world down. So collectively, with China off 7%, Asia's off 12.5%, and Europe's off 8.75%. So the problem we face as traders is that a lot of the excess can be wrung out of the markets, underlining the word can, in the overnight session. And what happens, the dynamics of the overnight session is it'll just move and move and move until prices get too high or too low, or somebody will act. So this 127.08, 127.16 area, that high volume number right here, is where resistance is. Last rotate up was 6. We have the breakout from yesterday at 27. We have the last rotate down in in Asia at 28.5. Europe's low is at 127.05. So 27.01, 26.29 is buy one. Failure to take out 8 to 12 is the short. And we're going to be subject to swings, high frequency trading, spoofing in the E-mini through this market, through gold and the other markets. Crude oil is well below where it was yesterday. It's bounced off of 32. That 32 area was a trading target. I believe the low overnight was 33, but don't hold me to that. Second trade up here will be 15 to 19. And then we're going to have the 25 to 21 will be buy two. Okay, Challenger job cuts. Last month it was 30,900. This month it was 23,600, so that improved. Jobless claims 272. That's probably the major news we have today. I don't know if it'll have much impact. I think large traders in the Fed and the E-mini are going to control our markets. Gallup, good jobs rate. GGJR, 44.9 last month. I guess these are jobs with benefits more than the minimum wage. I don't know. I haven't followed it. Bloomberg Consumer Confidence Index at 43.6. Natural gas inventories at minus 95. The energy traders will pay attention to that. So the focus will be jobless claims and the direction of the E-mini, with the direction of the E-mini ruling. Now, if you are a brand new trader and if your account is capital challenged, this is not a good day to trade. This is a good day to learn. While there's lots of opportunity from extra volatility, you also have wider stops. You also have whipsaws. You have quick turnarounds that will tax your trading skills. So on a day like this, if your capital and knowledge challenged, use it as a learning opportunity. Come back and make it part of your intellectual property, and then when things settle down a little bit, come back in and trade again. If you do have a bottom line, if you're a seasoned trader, there's a lot of opportunity here, commensurate with the risk, and you can prosper on a day like today. Okay, looking at the 30-year, similar situation. Again, my guess is we've probably seen the high. The first trade is a long. The breakout trade, you can see we broke it out from 14, 15, 16. We got single prints down here, so 21, 17 by 1. I'm going to put a question mark up here at 25. Picking up this little ledge right there. The second buy zone will be down in the picking up volume. Beneath that volume we'll make it 5 to 9 given the extra volatility. On the sell side, sell failure to take out 8 to 12. It's the area we want to test. And then 19s to 23s for sell 2. But you know, we kind of kid about it. We do live in interesting times. I mean, right now it feels like the entire world is becoming unglued. Long-term relationships, long-term alliances, long-term support being thrown by the wayside, with the United States probably responsible for most of it. You have every dictator in the world on the rise, doing as much damage and grabbing as much property as they can. You have the schism or the rift between Shia and Sunni Islam getting wider every day. Maybe Saudi Arabia and Iran will no longer be fighting proxy wars against each other. They might go hot. Our government is out of control. They are disregarding law. Really, in a lot of respects, we're a lawless nation these days, unless you're connected, got political clout. So they're just, I mean, it's not easy. And what it does for us as traders is we can actually prosper in this. Whereas if you're a traditional businessman, where your business model, and most business models are based on stable to good economic times, that doesn't work so well anymore. So here we are. Yesterday we left the market saying look for a test of 1100. We get to 1100 before we would get to 1050. And here we are. So we got this low volume number at 1101. If we get through that, next stop's 1107. So right now resistance is basically 1101, 1103. Sell 1. 7 to 10 will be sell 2. London's low was 92. Last rotate down was 95, so this 96, 94, buy 1. 91, 89, buy 2. Be glad you know the short side of the market, John. Most people don't. Okay, the reaction of the euro overnight was correct with the devaluation of the yuan. Yesterday, we didn't have the right reaction in the euro for reasons unknown. Well, Karen, as you grow as a trader, the short side will be eventually where you'll end up. It's just the moves happen faster there. And on the long side of the market, you got to hang around for a long time to see your trade work. So here's your London split right here. You can see we had a breakout from the Asian session in the 108.50 area. We're at 84. So sell 1 is 109, give or take. 9 1/4, sell 2. Draghi's got to be pulling his hair out. How dare the Chinese do this to him? Buy 1, 108.50. Buy 2, 8 1/4. Europe's numbers today. Retail sales were lower across the board. German exports were higher. Unemployment was generally below the forecast. So we had split news out of Europe. Retail sales off, German exports up. Employment rate was lower. So split news, not uniformly good across the board. Look what's going on in Canada. Canada, really a lot of Canada's wealth and their business and their enterprise comes from the export of commodities. Lumber, natural gas, crude oil, minerals, etc., even diamonds. Not everything comes that. They do a lot of assembly work for the United States, export to our markets, but the oil sector of everybody's economy has been trashed and has been hit really, really hard. I have a feeling we're getting close to a bottom, but may not be here yet. That article I haven't found said $32 was it. There's some credence to that. Back before 2006, 2008, prospects were drilled on the economics of $35 a barrel, and that included offshore. So we're down into the where reserves that have been added since 2000 probably have been added in the $30 to $40 per barrel break-even range, and that's you get down to the economic cost of production, and when it pull it out of the ground, if you don't have to pump to preserve your entity, you'll scale back. You'll preserve that wealth in the ground. You don't want to sell it at these prices, and you certainly stop exploration and drilling. So lots of pain being felt. Anybody that produces crude oil, including the United States. If you want to break the back of this and take the decision out of the hands of types like Iran and Saudi Arabia and Russia, you produce Canadian crude oil and the United States crude oil, and maybe you subsidize those producers' costs just to break the back of people that really don't have our best interests at heart or in mind. Okay, single prints up here at 42. Good chance of getting halfway into that to 64. So the 33.50 to 33.75 is prime sell territory. We're at 32.86, so 33 and a quarter, 33.50, sell one. That's on the assumption that we can get through 33. Don't know if we can. On the buy side, we have the London low at 32. So 25 to the buck for buy one. Break that, 31.50, 31 and a quarter for buy two. Don't think we break it. I think the low's probably in. Last rotate down stopped in the 65 area, so we'll put a question mark at 32.50. 33.75, 34 would be sell two. And short covering rally, if it gets started on this, could go $2 to $3 as the market unwinds. So to the E-mini, we took out a lot of support overnight. We run it down quickly. 21.08 was the last rotation up. We're well below that, 150, 170 points. Has tended to be where the Fed has jumped in. So 2100, 1930, 200 points takes us down to 1900. That's within reach. We've got this low at 1885. We had support at 1836. We had support at 1863. We had support at 1883. So 83, 63, and we're at our support here at 38 is where we are. So 1950 is a pretty round number. 1962, we're at 42 right now. So structurally, I think there is one short left in the market. If we don't take out and make new lows, and short covering and Fed intervention is what we play with. So we got this rotate up to 45, so 45, 50, stops above 50, sell one. Got the London high at 58. So 58 to 63, sell 2. On the buy side, 35, 37, so 30 to 35 will be buy 1. That's where support is. And then 20 to 25 will be buy 2. There are a lot of, the fundamentals that have been getting weaker and weaker all year long are finally being talked about. The financial meme of the Fed and this and everything is rosy has been kicked to the sidelines, as it was going to be. We know that you didn't have a unanimous vote to raise interest rates at the FOMC minutes, from the FOMC minutes, so there are people out there that recognize the precarious situation of the world. Back before this interest rate increase, China, the Bank of Japan, and the European Union all told the United States not to raise its interest rate. So here we find ourselves. So the Fed's a part of this too. It's going to take a bit to get everything up and posted. I'm going to get busy with that. I will be back with you as soon as possible.